Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on there? It's March 5th. And I'm Frank Curzio. It's the Wall Street Unplugged podcast. We're making the headlines and tell you what's really moving these markets. Mr. Daniel Crease joining us again on Wednesday. How's it going, buddy?
It's going great, Frank. How are you?
I'm doing okay considering the markets are crashing.
Oh, don't worry
Crypto's
about that.
crashing. Tariffs out of control.
Frank. Hey, I found an article I didn't read because it's not important, but this headline is all about you and where you come from, Frank. You New Yorkers is who I'm referring to. There's a study. Like I said, don't take this any further than you need to, people. This is just something great before we get into something valuable. I have no idea who this is. This is simply a headline, but it's all that you need to hear. Study, swearing linked with increasing pain tolerance and strength. That's it. So cuss all you want, you fellas. It makes you stronger and more badass, Frank.
I don't know about that. I curse a lot. I don't know if I'm more badass or not, but I'll take it. That's good.
Don't go against headlines, Frank.
Yeah, it's a headline that must be true. It's got to be true. If it's in the media, it has to be true.
That's right, Frank.
I want to start off with something. I have to start off with something. Okay. Now, I get a lot of mail delivered to my house. I don't know about you guys. And I never open up my mail, ever. Like, I rarely, right? And you know, my wife, the kids at home, I'll have this massive pile of mail for the month. And then they're just like, you got to take your pile, got to take your pile. And then finally I'll take it and just open it up. And I'm, you know, when I look at it, I throw out different things, right? I'm just like, okay, every flyer I'm throwing out, any credit card offer I'm throwing out, all this stuff. And some things are mildly important. And so I'm like, oh shit, I should open that. But I don't know. It's just, I'm never in a rush to open my mail. Emails and everything, I'm good. I open them all the time. So going through the mail and I see something from Capital One, and I normally throw this out, but I have a Capital One account. And I open it up and it's one page. That's it. It's one page. I open it up. I'm like, what is this, Capital One? And actually, it's a one-pager front and back about how Capital One takes my personal information and what they do with it. And a lot of companies do this. If you know, when you get a computer, the default option is they take everything and give it to third parties. That's the default option. You have to shut all the shit off no matter what computer you get. Please do that. The default option. And even though they say, well, you have to explain to people where all their information is coming, all this garbage, a lot of these companies do it anyway, right? Say default, but they disclose it. Like, for example, whenever you open up a website and you see it pop up and it says, hey, new disclosure agreement. If you click the X box not to see it, that's an endorsement of, okay, you read it. And now, trust me, you don't want to read that new whole entire disclosure statement because it's hilarious. They're like, we're going to take all your information. We're going to sell it to everyone, everything, right? Every website that you look at, that's the whole world right now. And companies are paying a fortune, especially when you look at the Googles, you're looking at, Meta, AI, all these companies, these search engines are taking everything from you because it's worth a fortune now. They have AI on it. And that's why they're signing big deals with everyone. So anyway, I opened up the letter. I said, let me see what this is about. And Capital One, trying to do a nice thing, says, hey, this is Capital One's. This is what we do with their personal information. And so I just started reading. I was surprised. I just want you guys to look at this because I took a copy of it. I want to see it. So hopefully this gets to Capital One and you send it to Capital One. So it says, what does Capital One do with your personal information? It says, federal law requires us to tell how we collect, share, and protect your information, right? It says the types of personal information we collect and share: social security number and income, account balances and payment, and account transactions and credit card and other debt. Account transactions, everything I fucking buy, everything that you buy in a credit card, they share. Now, then they go further and said, reasons we share your personal information. And it says it's Capital One share. And there's a yes clicked all the way through, right? All the way through here. And they said for marketing purposes, as you expect, for joint marketing with other financial companies, yes. For our affiliates, everyday business purposes, information about your transactions and experience, yes, we share that. For affiliates, everyday business purposes, it says for affiliates to market to you and non-affiliates to market to you. Yes. They share all the information, everything that you do, everything you buy, everything you do in a credit card. So I'm like, non-affiliates, right? I'm like, what the hell is non-affiliates? And let's go to page 2 because this gets better. You guys should look at this shit because it would really scare the shit out of you if you really pay. Maybe it's better that you don't pay attention. It says how they share your information, and they tell you use your credit card, debit card, pay your bills, or if you apply for a loan, or if you open an account, deposit money, they share this information. So I looked at what non-affiliates mean. This is what non-affiliates, which they share the data to. They disclose it. They said the definition of non-affiliates: companies not related by common ownership or control. That could be financial and non-financial companies. Non-affiliates we share with can include insurance companies, co-branded partners, retailers, data processors, and advertisers. Advertisers, which means every fucking company on the planet who's willing to buy this stuff, they're going to share it with. The joint marketing also. Our joint marketing partners include companies such as banks and insurance companies. So basically, they get all their information and sell it, and it's such a big deal. We all kind of know they do it. I was just funny that I open up, and this isn't, they send it through mail because they know most people like me don't read mail anymore. So they're not going to email to you and say how terms would change. They probably look at statistics, right? Now they said, hey, we got proof. We sent it to you. We're taking all the information you got. We're selling it just like Google. That's why I love Reddit now. I didn't like Reddit. Reddit signed a deal with Google where they shared. They basically gave them the API, the keys to the kingdom. Said, this is all of our data, everything. Everyone has a conversation. You have access to every single thing that they're going to run through their AI system. And Google said, hey, you know what? You can use our cloud, huge discounted prices, all of our AI on your server. And that's what they're doing with Core. That's what they're doing with everything. And that's why they're spending so much on AI, right? So the fact that they said the same, and they said they're sending non-affiliates advertisers, which means every company on the planet, it should really scare the shit out of you. I don't know if it does, but it should really scare. I don't know if it scares you as much as it does, but the whole world knows what you're doing every minute of the day. And now they predict, since we're creatures of habit, what you're going to do tomorrow, a year from now, 5 years from now. Believe me, they know every single thing. Everything's out there. Even if you click no on a lot of this shit, they're still able to track you. But it's kind of amazing that this is the default. It's not like you have to opt into this shit. This is the default that they push through, and the government does nothing about it. There's no laws around it. They're saying as long as you somehow prove that you send it to their email or send it through the mail, you could take all that information and sell it to whoever the fuck you want. And those names, from someone who's been studying AI, those names used to be 25 cents, 50 cents. They're probably like $5 a name right now. That's how valuable those names are. So these companies are making a fortune through selling your names and selling your data, not just providing those services, which is pretty fucking crazy when you think about it. Mini rant there, but holy shit.
That's a great mini rant. Not even 7 minutes, and you already proved my cursing story.
Holy shit.
Wonderful.
I mean, for Capital One,
look at Capital One being transparent, Frank.
2 ones. Fuck you. Seriously, I can't say it better than that. You're stealing everyone's info. You know how many people have Capital One? They're the largest credit card company in the world. Aren't they taking over Discover? The largest in the world is telling you that we're taking all of your data and selling it to the biggest companies in the world, to any company that wants to purchase this information, to anybody that wants to find out your transaction history, exactly what you buy, whatever, and they're selling it. Holy cow. To me, that's crazy. It's crazy.
It is crazy, but it doesn't shock you. You know what's going on. It's just unfortunate to have it thrown at you, I guess.
The way they just disclose it, like, I don't even care. I know 99% of people are not going to read this, so let's just send it to them. And, the people that read it, you see how they're fucking you. I
say we go like Kramer and Seinfeld. We want off the mail system, Frank. We don't want to get it at all. We want it off. Completely off,
which is probably a good idea. So let's get to another interesting topic that I'm sure is not going to rustle a few feathers. Trump's speech last night. The joint committees. I'll just go right into it. What was your takeaway? I saw the whole speech. What was your takeaway of the speech?
I thought it was what you should expect from Trump. He put out a social media tweet a day or so before saying he was going to tell it like it is. You had your typical divide. I think each party got what they needed for it. Trump got a lot of great lines, and he got interrupted and clapped, and, you introduced his special guest and different things. You had the Democrats sit there in unison. They do stick together. You got to give them that. They didn't stand for much of anything that I saw. They held up their signs and protested. Al Green or Al somebody got kicked out. So he got his, that was all planned. This is all a well-orchestrated play. People remember this is an act. This is a movie. People have parts to play, cards to read, things to do. Don't lose sight of that. And, so you got to give him credit. He got what he wanted. He got his 5 minutes of fame and, pictures and things like that. I appreciated Trump saying that there was going to be some, did he say disruption or disturbance on, talking about tariffs and such? I didn't think he was over the top. I heard Jim Cramer make comments about how he was, very forward or aggressive. I didn't think he was any more Trump than Trump normally is, to be personally honest with you. And, he took his victory laps and did things. What I thought he should have handled on a little bit more was, hey, the bill's passing. Because in my opinion, Trump can take credit for everything. He didn't address any negative. So he didn't say spending is still going on like crazy. He didn't do anything, and of course he can do that. And both parties are just going to blame other people. And if this is driving you guys crazy, or if you're just upset about this, take a deep breath, understand it's a game, and you just got to get through it. And honestly, if you're that nervous about the back and forth and the ups and downs, just lower your exposure. Don't sell everything, but that's the best way to handle this volatility and such. And honestly, what I wish he would have said was, listen, we have this proposed budget, this one big, beautiful bill going through. It's already been in the Senate and it's going back and forth between the House. What I think he is laying out is you're going to blame your opponents for everything until you get any bills passed, and then a few months after that. I think that's the game plan. I thought he did good, but honestly, I thought both sides got what they were looking for last night.
Yeah. I mean, look, with the tariffs and everything, I think people are quick to judge. And I think, look, he's using tariffs, guys, and I'm going to be honest with you. I mean, he's using tariffs. These aren't going to stay on long. They're actually talking about dialing them back again, right? It's just frustrating as hell because we have businesses that are actually freezing their business and they don't know what to do right now, especially even with Doge coming out. They don't really know what to do because they're like, okay, is this going to get cut? Is this not going to get cut? And yeah, with tariffs, are you going to move a plant? I mean, think about that. I mean, you basically went from 0 to 25% to 0. We're okay. And now you're going back to 25% for Canada and Mexico. China's going to be the back and forth forever. And they're in a position, America, where Mexico and Canada are going to hurt a lot more before America hurts. America's going to hurt, but not nearly as much as them. And that's why you're seeing, which I think is crazy, and I tweeted about this at Frank Curzio, is if Mexico and Canada want to seem strong, stop following everything that Trump does. Because as soon as he says 25% tariffs, we're going 25%. And Trump's like, we're going to go further. Then we're going to go further because he's dictating you. You're following him. He's making you're reactive, right? You're not proactive. And it makes you look weak. Like if I was China, I would say, and I talked to this offline, if I was China, I'd be like, all right, you want to fuck around? 100% tariffs on rare earth minerals. That's going to scare the shit out of the U.S., okay? That goes into every single electronic device, and they have a near monopoly on that. So, there's ways to show power, and if you're just following what the U.S. is doing, it's kind of like weakness. But look, there's a lot of things that people don't talk about. You won't find this anywhere on Google. You won't find this anywhere on liberal media sites and search engines. But, if you look at the banks when it comes to Canada, right? Canadian banks operate here. We're not allowed to operate there. Don't allow us to export farm products. Is a massive system, right? Yet, they import farm products. Their second largest import is cars and trucks, $80 billion annually. The companies that make these cars are not Canadian companies. It's Ford, Chevy, GM, Toyota, Honda, right? So, do you know how much money flows through Vancouver? Have you ever been to Vancouver? Vancouver is like
beautiful. It's
like 40% Asian, 30% of that is China. A lot of craziness flows through Canada there, right? So there's ways to kind of like say, okay, look, just down, okay, we're going to, make it fair. And I like the tariffs where, hey, if you're giving us a tariff on something, we're just going to reciprocate and do the same amount of tariffs on you. And I think that's fair, right? That's fair all around. But you're going to see, I think, it open up a lot more business channels than what we're probably projecting. Because if you're watching the media, it looks like this massive trade war is going to happen. Holy shit, we're going to have massive inflation. The market's crashing. It's temporary. Okay, it's temporary. So, that's one of the things when I'm just about tariffs. But when I looked at, my biggest takeaway, if you voted for Trump, you loved the speech. If you didn't, you hate him even more. But the people that I saw in pink, which is ironic that you wear in pink because a lot of the stuff that you support, which I think pink is representative of women and a lot of things that you didn't support with women, right? Which I don't understand. And not clapping at anything, shouting at times. To me, that doesn't represent the Democratic Party. It's not the Democrats that I know. And I think a lot of those people are fucking gone next election, and they better be, because if they're not, the midterms are going to be horrible for you. Because, when it comes to America, one thing that we do love is being humble, right? And humbleness. Like if you lose, fine, you're gracious. Even the Chiefs, hey, Eagles were a better team, whatever. I mean, you go down Mike Tyson. I mean, Mike Tyson bit someone's ear off and beat the shit out of his wife, and people love him now, right? Hugh Grant, prostitute, got caught. Robert Downey, drugs, craziness. Mel Gibson, everybody likes Mel Gibson now all of a sudden, right? Martha Stewart went to jail. She's huge. Like when you're humble and say, hey, you know what? I fucked up this and that, you'll always be forgiven. When you look at this last election, you have to look at it and say, why do we get destroyed? We got wrecked. And then take it on the chin, move on, get better. And they're not moving on. And those people who are still supporting DEI, men and women's sports, defund the police, no border control, reduce sentences for criminals, like 85% of Americans do not support that agenda. Yet those people in that room support a lot of shit that most Americans don't. And if those are the people you're going to put up where you're voting for as the person who's going to represent you, right, represent the constituents, you better watch out. Because if they still feel that way, there's like no remorse. There's no like, hey, we messed up, we got to do better. They're still pushing the policies that everyone in America, most people in America voted that they hated, which is why even people who don't like Trump switched and said, you know what, I'm going to vote for Trump this time. And that's why he won all the swing states. So it's a long way to midterms. Almost every midterm result comes in with the party that lost usually adds more seats in the midterm. It's not going to be the case if these are the same people running for the Democrats. But Democrats, I know, do not support a lot of the shit that those people in that room support. You usually have the same arguments between Republicans and Democrats, but that's an extremism right there. And to see you're holding up signs and you're pissed off and you're shouting and it was, Al Green. I wish he just stood there and didn't get out. I wanted to see if they would have picked him up, just carried him out. He was just stand there. You couldn't even really hear what he's saying, but I don't know. And they all left immediately as soon as he said, and God bless America. They all ran up purpose.
But like I said, that's all staged. That's all just, that's a plan.
Look, you could get pissed off at him, but again, America voted, and he's coming through with border control, what he said, tariffs, what he said, Doge, what he said, woke DI gone, like he said. He's trying to stop the Russia-Ukraine war. Again, he's not doing anything that's outside of what he said he was going to do before he got elected, what people elected him for. So I think the people who voted for Trump are very happy. If you look at polls, which are all bullshit, that you don't know what's going on. I mean, there's a CBS poll, and I'm only saying CBS because CBS is more liberal, that showed a 76% approved his speech compared to 23%. And then I looked at another 20 polls just to see, and all liberal sites said, less than 50%. And if you're looking at the conservative sites, they're it's 70%. Yeah. It's just it's such, it's such this bullshit divide and stuff like that. It's more about politics than us and people. But a lot of things were said about the markets. A lot of things said about tariffs. For me, when it looks at tariffs, guys, I'm telling you, I wouldn't worry about it. I said this before. They're not going to happen. You're going to see them. Again, he's got to push the issue to say, hey, we're going to do this. But it makes sense for everyone involved, especially if you're looking at the other countries, to really say, okay, here's what we'll do to make things better, because just, America is their lifeline. I mean, you're selling most of your goods. If you look at the three largest importers, are the ones that would talk about tariffs, which is China, which is Mexico, which is Canada. So, he knows this and says, hey, you know what, I want to make it more fair. And I know, we're looking at Canada, look at Mexico, I get a lot of emails. How is America doing this and this and that? Let's just have reciprocal tariffs. I think that's really fair. Hey, you're providing tariffs on this, so are we. You're not going to let some of our industries go in there. We're not going to let some of your industries go in here. Just make it the same. Because if you make it the same, everyone's going to basically favor the U.S. because we're the biggest economy, and you're going to be able to sell the most goods for our country. So it just makes sense, right? It makes sense all around. I don't think there's going to be a trade war. They're already talking again, Daniel. People are asking me about tariffs. I'm like, it's hard to even write a report on tariffs and tell you anything other than mention on a podcast, because we did that with a 15-page report last time. It was one of the free report we provided in 2018 about tariffs when all this shit went down, and it was, I think it was probably one of the most read documents that we've ever produced here. And a lot of people start listening to podcasts and stuff like that. But it's hard when he just flip-flops nearly every single week to write anything. But overall, if you look at long term, this stuff's not going to last. And I think it's, I think you'll see it really die down over the next 30, 45 days. But listen, a lot of people watch it. That was a big part of the news. In terms of the market itself, Daniel, I don't know if you saw the news lately on the economic front.
Yeah.
I mean, holy
You're
shit.
talking about the Atlanta Fed, I'm assuming?
I'm talking about a lot of different things. So, I mean, we can start with, what was under the radar was ISM manufacturing, which was about a week ago, maybe a little longer than that. And it was down to 50.3 to 50.8, which is under 50 is contraction, over 50 shows expansion. So 50 is that borderline number. So 50.3, everyone's like, okay, and they're cheering. If you look under the hood, one was 50.9 prior month in January, it's 50.3 in February. New orders in construction fell to 48.6, which is contraction from 55, which has to do with a lot of stuff I'm hearing from my subscribers around the United States, around the world, stuff like that, that a lot of projects are being halted, usually projects that they get the green light, they're no one's really doing anything right now because of everything that's going on with tariffs. Prices paid was up significantly to 62.4 from 54.9, which was the prior one. Unemployment down into the contraction territory, 47.6 versus 50.3. This is a big deal when you look under the hood, right? Because you're just seeing 50.3, it's okay, no one paid attention. Those are significant, those three things I said. New orders in contraction, prices 62.4 compared to 54.9, which is the prior. I mean, holy shit, you're seeing everyone raise prices. You even saw Best Buy come up and get hammered in their earnings and said, look, we're going to raise prices a lot more. They're going to raise prices like I told you. They're going to blame tariffs, even though it's not going to be because of tariffs. Companies are going to need to raise prices because they just have to, right? Their expenses are very, very high. They really milked it out, and their margins have been very, very high for a while now. And now you're seeing demand start to slow a little bit. And if you're looking at the jobs, employment and contraction, that it also came through at ADP, which is I wouldn't really mention this too much, Daniel, like ADP. You know, the jobs report's coming out Friday, which is a big deal, but only added 77,000 jobs compared to expected 145,000. Again, we're going to wait till Friday to see, but Friday's unemployment number is probably going to be the biggest deal from an unemployment number standpoint since probably the last 2 years. And I'll tell you why. If it's not good, we're going to see the odds of a rate cut increase dramatically, which is not on the table right now. Okay, so I shouldn't say right now. It wasn't on the table like 2-3 weeks ago. Now, it's already starting to increase. The Fed funds futures, as of yesterday, were pricing in an 87% chance of a 25 basis point hike in the June meeting. That's around the corner. It's not too far away, right? That was under 70% a week ago. If this number comes out terrible and we see more economic data that's really weak, you're going to see the odds of a rate cut increase dramatically. Is that going to be a positive? I don't know. I mean, it's telling you that the economy's not doing as good as we thought. And when the economy, it turns like this. But there's data out there. And then you look at the Atlanta Fed, Daniel, which you talked about really quick. Holy shit. I mean, this was 2.8% growth they're expecting for Q1 next quarter. And they're pretty reliable. Reliable when they get closer to the actual estimate coming out, which is still a little bit of ways. They revised it from 2.8 growth to negative 2.3% in a week. I mean, holy shit. And this gauge in early February showed gains as high as 3.9%. Now, maybe this is due to tariffs, yes, but I cover economics. I try to make it really simple for you guys. I always say if I could teach an economics class, I wish I would, I would love to teach it because the way they teach you with bell curves and all this shit bores the hell out of people. But it really involves everything that we do, right? It's your neighbors, what cars they're buying next door and what kind of jobs they have, how much milk is, prices you're paying, how much of your bills. It's so amazing that you could really see what's going on and it could filter down to how you play the market if you just pay attention to the things that you're doing and your friends are doing. But outside the economics that I followed pretty much all my career, I've never seen a revision like this other than black swan events when it came to the credit crisis and COVID. And remember, negative 2.3%, 2 negative quarters, GDP means recession. And the R word is a very, very big deal in terms of this negative driver as a headline. And you're going to know it's going to be across every media channel. They're going to be blaming Trump, even though this is a lagging indicator. It could be, it's from, previous. But still, it's going to be everywhere, which could, hurt stocks and see stocks come down. But the economic data has not been pretty, and some of this stuff is really outright scary that has just come out over the past few weeks.
Yeah, the data is tilting toward the negative, no doubt. The Atlanta Fed thing, I don't mean to laugh as a funny thing, but I do have to kind of have a tongue-in-cheek here and ask them what in the hell they're doing because they, as you said, Frank, they revised their forecast from minus 1.5% to minus 2.8%. Okay. That's an 86% jump. The point, Frank, not to just repeat you, they did it over the weekend. 1.5%, the negative rate was on February 28th. Okay. The last day of the month. 2 days later, they came out and lowered their estimate again. So not sure what they got over the weekend, Frank. Maybe somebody got divorced or unhappy or something like that. But that is just absolutely hilarious.
Yes.
Now, when you look at We have the Friday jobs number, like you said. I think that's important. Rate odds. I don't know if you have the rate odds. Did you see them on briefing?
Yeah, so on briefing I copied. That was the biggest
one. So the ones in June,
yeah.
The one in June is really surging, and that's really the next thing, in my opinion. When you ask, hey, what changes this tide in selling to buying, or from bearish in the short term to bullish, this tide of changing and such? And I want to explain, and let me just play like Jeopardy. I'll give you the answer. Because of our Willy Wonka / Elmer Fudd economy, Frank, the Fed has to come in and save the day. So now let's play the game on when and what that happens. So Friday's job numbers are going to be huge because if we see a big spike, that's going to get the Fed a little bit nervous. They're going to have to jawbone and say something. When is their next meeting? It's the week of the 17th. They're not going to do anything then, but look to see if any of their language or such changes. Frank, then we have to get this catalyst and stocks moving. We talked about coming off of a solid quarterly earnings report, officially kind of ending now, but already, and you called this, we need to see estimates come down. Why? Because if we continue to go in with high estimates and companies come in lower the bar, we're going to get absolutely smashed and wrecked again on asset prices. But if you look at FactSet, just as their latest FactSet earnings insight that Frank always talks about, it's a free report, it's a great report as of February 28th, Frank, they're showing significant pullbacks in earnings expectations. That's all good. I'm not sugarcoating anything. I'm not saying it's not painful right now. We're watching stocks come down. We're getting closed out of some positions. However, you don't throw in the towel at this moment because, as Frank said, this is not going to last for months or quarters on LinkedIn. You're going to see a lot of this back and forth between their trade policies and such. And quickly, if I may, Frank, let me just explain why we have complete leverage, as Frank has talked about. Because when you look at GDP, Frank, we are no doubt the king. And I've pulled from a couple different AI chatbots here and also just the Google machine on the internet. Mm-hmm. And our GDP, and this is basically from Statista and the IMF, GDP for the United States, about 29 trillion. Okay, not bad. China, 18 to 19 trillion. Okay, Canada, 2.2 trillion. Mexico, give or take, 2 trillion. Mm-hmm. Now, I'm not bashing them by any means. We're not just saying, well, we're bigger, so we're better. Here's the key on this reciprocal tax thing, and this is why the volatility is going to be at least through April 2nd, because you want to see what these deals are back and forth. Frank, everybody talks about tariffs, and I have a quick bone to pick with CNBC because I had them on in the background basically all day yesterday, and they said very little informative or anything useful to me because all they talked about was Trudeau and
Trudeau, I love how you say that.
Whoever his name is. He's on his way out.
I'm not even going to correct
He's such a scapegoat.
I love the way you say it.
That guy, it's easy to throw stones at losers like him because the guy went on TV and act like a macho man, knowing he has, 4 or 5 days left in office when he made this speech. Mm-hmm. So it's completely regardless. It's just beyond hilarious. However, CNBC and everybody else keeps talking about tariffs and what's this tariff rate and that tariff rate. And Trump, to his credit, has said, listen, I'm going to treat tariffs like the VAT tax, value-added tax, or goods and services tax. When you look at value-added taxes for Canada and Mexico, Canada is much lower. VAT and GST taxes are about 5%, but it's very odd on different products and such. And we do the same thing. Mm-hmm. We can exclude certain items and all that kind of stuff. Mexico has a 16% VAT tax, okay? And then if you look at what's going to kick in April 2nd, you look at the UK, you look at France, you look at Germany, those are 20, 20, and 19% VAT taxes. That is a significant increase from the United States, which is zero. Now the United States does about a 6.5% sales tax, but my point is it's nowhere near even. And just one last thing, when you look at Canada and Mexico, which we're in this big trade war right now and it's pushing around asset prices, Canada exports 78% of their goods to us. Mm-hmm. Okay? That's significant. You know how much we export to Canada?
How much?
22%.
Yeah.
Mexico sends 80% of their goods to us. Or excuse me, they send 78% to us, 22% to the rest of the world. That's Canada. Mexico sends 80% to us. Yeah. Okay, that is significant.
Yeah, they can't sustain this for long. They could put up a good fight. They could say what they want, but the bottom line is right now they're talking to Trump right now and trying to see, okay, what do we need to do? What do you want? This way we can get these tariffs done. It's not sustainable, and that's what you need to know. It's not the story everyone's telling. I know if you want to watch the media and get crazy, listen to all these fucking stories and, oh my God, it's a trade war and Trump's an asshole. It matters about stocks, right? And that's what Daniel's explained. Those are really good statistics, by the way. Good job, Daniel.
Hey, good for Statista. You guys just Google stuff you want to look at, put the source behind them. That's a good little hack. So yeah, do that.
Yeah, and look, you mentioned earnings and even earnings over the past few trading days. I mean, it's been horrible, right? Mm-hmm. I mean, you got Target, you got CrowdStrike, AV reported bad numbers. It's in the portfolio. We're up a ton on it, but it's down. Abercrombie and Fitch, which was like a big leader in retail, they just warned. Best Buy, that stock got hammered. They warned they're going to raise prices considerably. Ross lowered guidance. Walmart, Duolingo, AppLovin, Hewlett Packard. This is over the past 2-3 trading days of names that got really hammered. So when I look at everything, I'm going to tell you something. I'd be a huge buyer of the market right now. And I would say by Friday, I think this market's going to turn and you're going to see it end up a lot higher because there's just a lot of catalysts right now in terms of, talking about, the tariffs and ending and again, that's in the news again and saying, okay, maybe we'll just, hold up a little bit, but that's going to be quick, right? That's something that I think is going to reverse. It's impacting the markets now. I think it's an incredible buying opportunity. The jobs number, I think if it comes in really, really weak, I think you're going to see the market come down a little bit. And then it's going to be a reaction and say, holy shit, we finally got rate cuts coming, right? Which we thought were going to come. And then we just had this stubbornly, great unemployment. We had an economy doing well. Now you're seeing it kind of break down a little bit where the Fed's going to be like, again, it was really hey, we might not even cut this year. It was 4 or 5 cuts, 4 or 5 months ago. And then it went to 1, 2, maybe. Now you're seeing those odds go up. So if we get a weak unemployment report, I think you're going to see the market sell off a little bit and then probably end the day strong and into next week strong. If we get a strong one, people are going to be like, all right, the economy is good. I still think we're so oversold. We're extreme when it comes to the VIX and oversold levels in the greed field. We're at really extreme levels right now in terms of stocks being oversold. I mean, I saw someone post of how many stocks are down 10%, like over 1,500 stocks down 10%. There was lots of stocks down 20%, 30%. I mean, some of these stocks, some names are really getting hammered. Now, again, with that said, you're looking at the catalyst. It's when, not if, these tariffs are going to come off and everyone's going to be settled. You got Trump officially signs a deal with Ukraine for mineral rights, which is coming. And he wants to highlight that, make sure. Which, by the way, I'm going to say something. I mentioned this to you, Daniel, where I don't know if that's a good thing or a bad thing. If you're signing a deal for mineral rights and you have Zelensky signing it, he's signing it because he wants more funding, right? He wants more weapons. He wants us to give him more weapons. If he does that, then he obviously doesn't think the war is going to end. How's it going to end the war? So if he really felt like, hey, we're going to have a peace agreement and we're going to end this, why would he sign the minerals agreement now? Why don't you just say, forget it? I mean, yes, you got to have that front where, okay, we get no weapons and Russia needs to know that we still have the U.S. on our side. But, if they're signing this deal with the U.S. is signing this deal, it just, to me, is an indication that this war is not going to end as quick as everyone thinks. I'm just saying that. That's what I believe is my opinion. I don't know. Look at the money they're saving from Doge. You want a catalyst, right? They're talking about giving $5,000 back to everyone. Right now, it's $700 per person based on the money they saved. I know there's reports saying there's no proof and this shit. It's all on fucking X. Just go on X. It's all right there, right? Of the stuff that they're saving. They're saying $5,000 checks. This isn't money printing. This is your money that you paid that was allocated someplace that you're going to get back. If they give a check for $5,000, as they're talking about, even if it's for $1,000, I mean, we saw what happened when you hand money directly to consumers during COVID, which never happens, right? We never see that really. Maybe in tax, in tax cuts and stuff like that. But usually even during a credit crisis, they gave the money to the banks decided who to hand that out to and they controlled it. That's why we didn't see massive inflation based on the CPI for so many years after the credit crisis. But COVID was different because we handed checks directly to the fucking people and said, hey, spend whatever you want. You don't have to pay back, right? That's why we have massive deficits. That's a very big deal if you're handing those checks. That's a very, very big catalyst. Again, note the fear greed index and the VIX approach oversold levels, right? So, for a quick pop, the international markets also look positive. After many, many years of underperformance, quick fact here, which I thought was pretty cool. 13 years in 2012 since the Eurostock 600 beat the S&P 500 in a calendar year when both of those indices closed green. Currently, Europe is up, depending on which index you're going to use, between 7 and 16% year to date already.
Nice. And
we're down almost 2% of the S&P 500. So you're seeing demand, you're seeing money flow into international, just different countries, which is good. So there's areas there. I still expect strong earnings, even though we're being revised. We're still going to be growing much faster than historically on an annual basis. And again, the chance of rates easing is huge. I mean, that wasn't on the table. Nobody was talking about, wow, the Fed's going to cut rates. Nobody's talking about it. If this job report's bad, the Fed's going to be there, like Daniel said. You have to factor that in. People don't want to factor it in because they hate it. They hate the fact that when shit goes bad or a bank does some stupid shit, that they get bailed out. I get it. I hate it. You want to hold up a sign. You want to yell. You want to go on social media, tell all your friends how you hate the banks, you hate Wall Street. That's fine. Our job is to make you money. If the Fed's going to cut because they see the economy slowing, that's going to be a boon to, look what happened to mortgage applications. They just came out yesterday. Did you see them? Volume was up 20% last week because mortgage rates fell to their lowest level since December at 6.7%. Applications to refinance homes jumped 37% for a week. They're up 83% higher the same week compared to a year ago. So already you're seeing rates start to come down a little bit. Now if they start cutting, again, that's not really factored in because no one was expecting the Fed to do that. Now that we're seeing weak economic data, that's on the table. So, potential rates coming maybe, and then you have what? In Friday, there's going to be a very big... I was going to say,
why are you asking or hinting that the markets could turn Friday, Frank? What's
Friday, and I think one of the best things I think you're going to see, which is because crypto has gotten annihilated, okay? And we got a lot of people on our newsletter pretty much at a wrong time, and that's on me. We've seen things turn very, very fast in this industry. I said, if you're going to buy... You should have allocation to this sector. It's incredible. The technology is, I'm not talking about meme stocks, which are down tremendously. I'm not talking about the garbage. The next 100 to 150, 200, they're very, very good names with amazing technologies, amazing software that really disrupts the banking industry. And you're seeing this sell-off in crypto that I think is going to turn. And on Friday, you're going to see Trump holding the first ever crypto summit. Daniel, what are your thoughts? Because I think this is going to be a big deal. The fact that he announced a strategic Bitcoin reserve, which, a little bit on the table, but now he came out and said that. You saw Bitcoin surge back to 95,000 and then pull back sharply. I don't know why he announced a whole bunch of other cryptos. I thought that was terrible. I don't know why you're picking and choosing. The government shouldn't be in the job picking. It's Bitcoin. That's it. I wouldn't even do Ethereum because there's it's actually a lot of better alternatives to Ethereum. Plus, Ethereum just got hacked, right? Really, really bad, which is creating a problem with them, whether they should fork or they should keep it the way it is, centralized. Anyway, it should be Bitcoin. I didn't agree with Trump announcing like out of nowhere, just selecting some of these, cryptos. But you saw that go up tremendously last week and come down. And I think, to me, Trump is pretty pissed that happened. I think it's going to be major announcements. This crypto summit's going to have a ton of big people, all leading CEOs. Dan, what's your thoughts?
Well, they definitely need something to come out of this meeting other than just your typical hyped up. And what I hope to hear is more structured content or deadlines around actual bills being passed. So hopefully they talk and educate or update us on stablecoin bills, any type of regulation, what's gathering momentum in the House and Senate. I know Senator Cynthia Lummis of Wyoming is a big component of all these Bitcoin strategic reserves. A lot of states are going into that. I believe Michael Saylor of Strategy is going to be at this crypto summit. Hopefully he can orange pill everybody. So I do expect some price action and some movement, but I do think that we need to hear some deadlines. I think Trump, who is a fantastic marketer, I think he's one of the greatest marketers of his time and generation. I don't think you can deny that. You don't have to like him to admit that, but I thought he absolutely did a terrible job marketing this strategic reserve. Like you said, I mean, he tweeted out and didn't even include the Bitcoin, biggest and most well-known and powerful cryptocurrency. And then it just the optics look bad. Then you retweet and say, oh, well, of course I like Bitcoin and Ethereum too. And it made me think, and I'm not bashing Trump here, so don't misunderstand, but you got to call it like it is. Trump is not looking out for the crypto community other than for himself through the crypto community, in my opinion. And I'm okay with that because I believe they're all in politics egomaniacs. I think he's the most honest about it. And why I say that is because if you go back to his Nashville comments when he spoke at the Bitcoin conference in Nashville, Frank, you could tell he's smart enough to know what it is, but he's not into it because he said, you guys do whatever with your crypto and your other stuff and don't sell it and all that kind of stuff. Blah, 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 blah. He's there for votes and that's fine. Now his family's involved. He's in it for money. That's fine. I'm okay with that. I don't care about people being selfish in a sense like that. But what I do think is I think he messed up that Bitcoin reserve. I don't know why, and I think the volatility around Solana and XRP and Cardano, I think that's a big mistake. That the optics, again, look pathetic because you're only enriching those around there that hold those coins already. And so you're going to have a lot of back and forth. I think that deters from the actual moment. But all you have to do is say, listen, we got everybody in line. We're going to pass meaningful legislation. We're going to have regulatory clarity at the SEC level. And I would love for Trump to comment on when Paul Atkins is at least going to be confirmed and or get questioned on that kind of stuff. We saw Linda McMahon at the Department of Education get confirmed. That needs to keep rolling. So really, I hate waiting. I shouldn't use hate, Frank, but I do have hate in my heart on this. I hate waiting on the government because we are so dependent on them. It's pathetic. But that's where we're at right now. You need legislation or at least momentum behind legislation to get that next leg up. Because as Frank and I have already talked about, nothing in the crypto thesis has changed. I don't give a shit if Bitcoin is 15,000 or 100,000. The idea and the thesis behind Bitcoin remains the same. That's actually what's so beautiful about it.
So to me, the thesis, and I'm going to tell you because the people that are going to be at that meeting, Daniel, it's all like the big CEOs. They're going to be crypto czars, David Sachs, Cynthia Lummis, who is a big deal, is head of the Senate Banking Committee on Digital Assets. And she's the one advocating, and it's pushed through to now David Sachs is talking about this. Everyone within the Trump circle within crypto is talking about this. Other members of the committee about the strategic reserve that's about to be created. And she's floating the idea saying and pushing it through. Saying that we want to buy 200,000 Bitcoin every 5 years to get to 1 million. That's going to create the strategic reserve. I'm going to explain to you, and please, if you you want to send this to someone, feel free, because I don't think people understand what this means. And this is why I was rushing to get people into my newsletter, into the crypto newsletter, because Bitcoin, if they do this, is going to go to 200,000, and it's going to happen probably within 12 months, maybe 18 months. And I'm going to tell you why, because it's about math. And when you look at Bitcoin, okay, the last fork, or not the last fork, the last halving, right? So when we halve the Bitcoin, which happens every 4 years, right? So it reduces the supply growth. There's a fixed amount of supply, we all know, right? 21 million around, whatever. It's probably less than that because so many people lost Bitcoin and don't even know what the hell it is. But after the last fork right now, and after the last halving, there's only 450 Bitcoins that are produced each day. And if you're on YouTube, I got this nice picture up and just had my designer actually do this so you could see it. Only 450 Bitcoin to produce each day. If you multiply that by 365 days, that's 164,250 Bitcoin produced annually. Annually. the strategic Bitcoin reserve, the government, they're saying, is going to purchase 200,000 right away. Now, this doesn't include the $100 trillion in assets under management right now, which BlackRock says pretty soon, maybe 3 or 4 years, 5 years, he believes that everyone should have around a 2% allocation of Bitcoin. That's not including $2 trillion, which Bitcoin's market cap is 1.6 trillion right now. That's not even including that. It's not including all the institutions. Abu Dhabi just got in. You got Wisconsin Pension Fund just got in. You got Hong Kong launching their initiative, right, in crypto, which is incredible because China has been kind of like anti-crypto. You have a lot of pensions. Goldman Sachs just made a big purchase as well. These institutions just started purchasing, and they just started purchasing last quarter because Trump won the election, and now they know that they're going to have a framework, a regulatory framework, which again, Daniel's right, needs to come out sooner rather than later, but they can have this regulatory framework around it. Guys, if they're purchasing 200,000 Bitcoin annually and there's only 164,000 produced, what do you think is going to happen? What do you think is going to happen to Bitcoin, right? I mean, simple, right? Supply, demand. Then here's the thing. In 3 more years, we're going to see another halving. There's only going to be 225 Bitcoin produced. You could do the math and times that by 365, but that's still going to fall. We're going to be buying 200,000 Bitcoin annually. I mean, you're looking at an asset that's going to go up unbelievably. And we're not even talking about companies like, MicroStrategy, which is now Strategy, or, mining companies that are mining for this, have it on the balance sheet, or even a lot of corporate companies that are looking to, put this on their balance sheet. It's not going to be a lot, but even if it's, some of the $2 trillion that's on the balance sheets, it's still going to be effective, right? So it's incredible when I see this, and I think they're going to make a big splash because I think he got embarrassed a little bit because crypto's come down. If they do this and they announce a date that they're going to do this, and this is what they're going to do, 200,000 Bitcoin annually they're going to purchase, Bitcoin's going to skyrocket. And when Bitcoin skyrockets, the next 100 to 200 tokens are going to absolutely surge to level. And when they surge, I'm not talking about if you're looking at companies and SPACs and IPOs and stuff like that, it's rare that you find something that's gone up 10x. You'll find the NVIDIA here or that or whatever, but most of these companies come out crazy valuations. In crypto, you're going to see all the 200 of the largest have all had moves that are like 20x, 30x, 40x, because they're not IPOing at crazy valuations. They're coming out at very low valuations. And right now they're down 60, 70% from their highs, especially some of them are down 70%, 60% just over the past 2 months. It offers one of the greatest opportunities I've seen to buy crypto. Stick to the big ones. Solana, be careful. We have it on portfolio, but they are like, most of the meme tokens are on their chain, and you're seeing meme tokens really get smoked, which I'm happy to see because a lot of this is bullshit. You need the bullshit out of the industry. When I look at crypto and what I'm seeing here with this strategic Bitcoin reserve, it's a game changer. I've never seen a bigger catalyst for Bitcoin since I've been covering Bitcoin since 2016, 17. This has been the biggest catalyst we've ever seen ever in history, right? And it's not even debatable. I mean, how much money, and that's just one government where we're looking at other governments might look to have their own strategic reserve for Bitcoin. It's incredible if this really happens, if they're serious. We'll see on Friday how serious they are. Hopefully it provides a date and says, hey, this is what we're doing. This is what we're going to purchase. If that happens, look out. Crypto, I mean, you're going to see immediately Bitcoin shoots like 105, 110 and probably hit new highs. If they have the announcement with a date and he, like Daniel said, he's a great marketer. If he markets this right, you're going to see crypto absolutely take off. Because
I don't think they make that announcement Friday. Do you think they make an actual announcement Friday?
I don't know if they make the announcement, but if he just says we're looking to do this by Q1 and here's what we're going to do.
Yeah.
Cynthia Lumings, and a lot of people support it. We're going to be buying 200,000. It's got to be a little bit more details. But that's, if you really want to make a splash in this, if you really, really want to see that, and I think that's what he tried to do with that tweet, which was terrible, like you said, it was all over the place. Like, oh yeah, and we're also going to include Bitcoin.
Yeah. Oh, don't forget Bitcoin.
And you're going to see crypto absolutely surge, and all depending on that meeting. And it is going to be interesting. It really is, because I can't see, where we are oversold levels just with certain catalysts. I think right now is a good time to buy your favorite stocks that are down tremendously, and especially cryptos. I think we're really going to see that going into next year, especially when we have even bigger macro stuff going on where we could see the Fed start cutting rates if we see more of a slowdown. And a lot of negatives are factored in. A lot of companies are lowering their estimates. The ones that beat are only going up like 5-7%. The ones that don't are going down 15% plus, right? So you're seeing this go from a high expectation market to a low expectation market. You're seeing huge oversold levels. Stay the course right now. I think it's going to be an opportunity to really make a killing probably in the next few weeks as this market really takes off. I see it going a lot higher before lower. That's just my 2 cents.
There you go. There's a good trading opportunity around all this stuff coming out.
2 cents always means nothing. Pretty much means nothing. But look, we got lots of earnings and stuff like that too. We're going to discuss tomorrow, right? And I also wanted to mention, listen, if you haven't seen my presentation on Sugarfina, hopefully you took a look. If you're an accredited investor, we have exclusive access to this deal, which is a company that's generating 50 million in sales. which is the forecast after they just closed 2 deals. And we're able to come in at an $80 million valuation in private markets. The terms of the deal are incredibly favorable, which include full warrants that can be exercised as soon as a company IPOs. You don't see that often. A lot of times you get into deals and you're like, okay, they're going to exercise. I'm going to private placement with a publicly traded stock. And maybe, they're raising money and at $2 and they're going to provide warrants that exercise at $3.25, $3.50. As soon as the company goes public, it's like you're doubling your shares right away. And they're also paying you a 6% dividend. The company's projecting the company's go public in, the guys to finance the management team in 9 to 12 months. So it's not like you're sitting on a private company for a very, very long time. The managed team running this ship has a history of creating monster companies through rollups. If you're not familiar with rollups, it's buying a lot of competitors and then integrating them, right? These smaller competitors integrating with one giant leader. That's if you're looking at Oracle is probably the biggest example, right? Of how many companies that they acquired. The management team did it with Marriott in 1990s. They did it with Hilton, spinning off the gaming division in early 2000s and buying casinos like crazy. They turned that division from making $500 million in sales to $5.5 billion in a few short years. If you're on our email list or listen to past podcasts, you probably heard me mention this idea, and you maybe even saw my video presentation on it. But we just opened the capital raise now. So I was talking about how we're going to do. We just opened it on Monday afternoon, late afternoon. So we're looking at 36 hours. We're right up to 1.5 million in commitments in the first 36 hours, which is very, very, very strong. A lot of people have said that they're going to come in to invest in the deal as well, and including several funds. I've never had so much interest from funds before because I know in our industry, and Dan and I rag about this all the time, where everything's the greatest pick ever. Everything's going to go up 1,000. Right? We see that in so many advertisements and shit like that, and really turn our industry into a shit show. And it's why I get pissed off and emotional about it, because it's an industry that I grew up in. My dad was in for 30 years, like that, and I take pride in this industry, and to see where it's gone, where people just care about the marketing more than helping investors. But when you're looking at funds, the reason why funds are really looking at this, and these are guys that are on a Curzio One in our membership who have exclusive access to this deal, is because the terms are that favorable, right? And I'm not used to seeing terms like that, where the better the terms, the lower the risk. And that's what you want. There's always risk, but you want to minimize that risk while also having that massive upside potential. And that's what you have with this deal here. But you have to be an accredited investor to come in, and you have to be a Curzio One member. And for this deal, we have another great deal in the pipeline coming in next month as well. I lowered the price of a One membership. Actually, I shouldn't say I lowered it, but I provided a special 1-year trial deal so you could see what the membership's all about. And One membership gets access to all our products that we offer, all products and services across the board. You get access to all of that. Also, you're going to get a special invite to our first ever Curzio One conference. Yes, we're going to have a Curzio One conference. And so many people for the last 6 years, Daniel busted my balls. When are you going to have a conference? This way we get to see everyone in person. It's going to be awesome. We're going to launch our first one. It's going to be held every year after, but it's going to be in September, October. So if you're interested in One membership or learning more about it, just email me, frankcurzioresearch.com. Almost every person I spoke to about this membership and asked questions about it ended up coming into the One offer for the year because it's a really good deal. And again, if you're interested, frankcurzioresearch.com. If you come in within the next 10 days, I'm going to guarantee you a placement in this Sugarfina deal, and also guarantee that you can get into next deal next month, only in the next 10 days, because we're seeing huge demand. And if we fill it for 10 million. And right now we're off to a really, really good start, and which I'm happy about, because I think people will do well. I hope people do well. And it's one of my biggest investments too. So if it doesn't work out, there's always risk to every investment. I'm probably going to lose a lot more money than most people coming in here, because I am putting a lot of money into this deal. So I'm really excited about it. So again, if you're interested, credit investor, shoot me an email. And again, very transparent. It's not even a sales call. I'll just be like, hey, this is what it is. If you want to come in, come in. If not, don't come in. But yeah, I'm really happy to be part of this deal, and it's going to lead to a lot of great deals coming, especially over the next probably 6 to 12 months for us, which is awesome. So other than that, Daniel, what do we got to look forward to? We got earnings we want to talk about tomorrow?
Yeah, talk about some earnings tomorrow. Talk about some AutoZone, one of the best absolute boring stocks that you ought to have. I've talked about it plenty of times, but yeah, we'll go over a couple of those.
Shit.
A cybersecurity. What's wrong over there?
Shit. I should have just ended the podcast there.
I know.
Look like the market's like freaking taking off right now.
Yeah, perfect.
I told you it was going to happen. I'm so right. I'm taking
all right,
victory lap.
DanielCurzioResearch.com.
30. I gotta get ripped for that. Dude, freaking Nasdaq's up 1%. It was down, right? And everything was down for like third straight day. I'm like, holy shit. And it's so funny because do you notice the volatility in the past couple of days, Daniel? Like what's going on with CNBC? Yeah. And the headline, right, the S&P 500 falls for a third day on fears Trump trade fights. So the headlines can't keep up with the volatility because the Nasdaq's now up close to 1%. And even the Russell, everything's up across the board, and VIX is down. Yesterday, what do we see? We saw 750 down. Then all of a sudden, like from 2 to 3 o'clock, we saw, I think, go into the green. And then with the last half an hour, they sold off again, and everyone's like, and the headlines can't keep up. So what were you saying when you saw CNBC on the bottom? They said something, and the market's actually green, and they were like,
yeah, I mean, they were going to commercial, and they were like, oh, the Dow was down 700, now it's only down 300, and right next to it, the NASDAQ was already in the green, and they didn't mention that. They were just like, oh, the Dow's coming back. It's like, yeah, I mean, the NASDAQ was just down 2.5%, now it's positive for a brief. That is a massive intraday. Most of it's noise. Again, that's just the way, it's just where we are right now. Don't get frustrated. Stay tuned in here. We'll navigate it.
Yeah, and like I said, navigating the trade wars, I know you're not going to hear this anywhere. If you watch TV, you should be watching TV. Watch, Fox, watch CNN, watch both sides. That's the sentiment that's out there. That's why I watch it. And if you watch sentiment, especially from the liberal media channels, they're telling you like this massive trade war. They're trying to figure out. You see everyone trying to analyze the tariffs and how it's going to impact. It's to me, it's creating this big buying opportunity because it's in no one's best interest for those tariffs to actually go into full effect. And it's really bad for other countries if it goes into effect. It's going to impact them much, much more, much, much faster than the U.S. So they're going to come up with a deal, just like we said last time. They're going to come up with a deal. It just makes sense for everyone. But the good news for you is stocks are selling off because of the headlines, because of all this shit. You're going to have your moms call you or whatever, and your dads and say, hey, that aren't in the market saying, oh my God, there's a trade war. Should I get out of the market? That's usually a sign for you to freaking buy the shit out of the market, right? Because that means it's getting to mainstream media. It's getting to just mom and pop investors or people who are not into the markets too much. But the trade war and everything, we saw the same thing in 2018. Again, I was surprised that he's actually saying, okay, 25%. He really pushed it, but you need to push it to show that you're not full of shit. It's like when you yell at your kids and you threaten them and say, okay, you got to follow through with the threat. If you don't, your kid's going to own you for the rest of your life. Trust me on that because I've made that mistake several times. My daughter's just like, yeah, you're not going to take this away from me. You're not going to take the VR away from me. No, you're not. You're going to let me play. So I'm not going to play. I'm going to sit here and bother you all day. They're smart, my daughters. Pain in the asses, but they're smart. I love them. But, he wants to follow through, and he's following through right now, but it's not sustainable. It really isn't sustainable. You're not going to see this, maybe more plants open here like he was talking about and stuff like that, but you're not going to see plants actually close and then come here. It's just too much, but it's resulting in a lot of business being frozen. People are just hesitant to pull a trigger on deals they normally pull a trigger on. And that's another catalyst that's going to come up because once this is solved, and even if we got good news on a trade deal and we're on better terms with Ukraine, again, that news caused the markets to sell off as well. And now it looks like, okay, Zelensky's going to have to come back to the table. He's got no choice, right? We're providing all those weapons for him. So that's what Trump is doing right now. Again, whether you like him or not like him, you want to play from a market perspective. And I think there's a good opportunity where everything really down a lot. NVIDIA, great numbers, pretty good guidance. And I mean, the stock's off, 15% after they reported earnings? I think it's a credible buying opportunity. There's a lot of names out there that shouldn't be down as much as they are. That's creating good buying opportunities. I think in the next week or two, you have the opportunity to really see some of these names pop 20% plus. And that's what Daniel and I are going to talk about tomorrow in Wall Street Unplugged Premium, are names that we believe are oversold, especially in the oil industry. Did you see what natural gas is?
Mm-hmm. Holding in there, doing well.
Isn't that one of your big plays this year? Is that forecast, natural gas?
I got a lot of energy exposure in CRA. All of them are still holding up very well. We have a couple losers, of course, but natural gas is going to continue to do well as oil. I'll share some stats tomorrow. My favorite oil chart ever tomorrow. How about that for a tease?
Yeah, and good call on that. You said at the beginning of the year, it's one of your best trades, right? Natural gas. You should take the victory lap and just be like, hey, I won. Because I think it was like I don't even want to bring it up. But it was a good call. Right?
Yeah.
375.
Well, it hasn't hit my target yet. I think I put it at 450 at least. So we gotta haven't hit it yet, but
we're 440.
Telling you should be very excited about natural gas and the potential going forward.
And that's the way to fuel AI that's really available right now. Okay, you got these when you're looking at mobile uranium and nuclear stuff. I mean, that shit's so far away. And the approvals that you need for that and the safety approvals you need for that. I mean, it's everyone that I talk to within the industry that knows a lot about this shit is like 5 years plus away. But natural gas is just there for the taking. If you're looking for energy, which we need a ton of energy for everything, especially AI, I mean, natural gas is just the obvious choice. It's easy. It's right there. And now you have, a favorable administration that's, hey, we're going to be producing a lot more oil. That's why you're seeing oil stocks really get hit a little bit today. But, the production is there. And, natural gas is definitely the way to go. I mean, everybody's talking about nuclear and stuff like that, which I get. But, man, natural gas is just right there for the taking. And you're seeing it. So... Anyway, Daniel, that's it for us. Any last words, comments, anything?
No.
Nothing at all?
Cheers. Mañana.
We still
got anything better than Wednesdays
left.
or Thursdays?
Could you tell me your experience yesterday before we go? Could you end this with a story?
Oh, yeah. So I went and got a sub from a place next door to our office here, and I was telling Frank it was hilarious. I go in and I ordered a sub, and it was going to take a few minutes. It was a hot sub, whatever. So I use the bathroom, and I come out, and there's 4 or 5 people waiting. And the 2 gentlemen working behind, younger guys, nice guys, taking orders. It seemed a little chaos. And I came back to the office and told Frank, I said, you wouldn't believe this experience I just had. I said, it was like a zoo. I mean, this poor guy walks around the counter 3 to 4 different times with sandwiches, more than one sandwich in a bag. And he's going up to people like he, very confident. It's like, hey, you had the, number 2 with no onions, right? And they're like, no. He's like, oh. So he goes to the next guy. And literally, we're all standing right there. I'm just like, nah. And he recognized me and remembered what I got. So he's like, I know it's not you. And the guy does that 3 or 4 times. Everybody's sitting in the restaurant, standing there waiting on it. This poor guy walks around with all this food and nobody claims it. I don't know where the hell it went. And then he starts handing out food to our subs. So I was like, man, he walked out, didn't even say, he's like, hey man, I'm sorry. I just said, you're doing fine later. But Frank got a kick out of that. I can't go anywhere and order food and not have a fun story. It's crazy.
So he just walked in. He's like, it was a real shit show. What's going on? It's so funny.
Anyway, so there's cool. My fun story.
No, lots of fun stuff. So guys, listen, tomorrow our podcast, we'll see you then. Wall Street Unplugged Premium. Questions, comments, we're here for your email.
Daniel at CurzioResearch.com.
And for me, Frank, CurzioResearch.com. And we'll see you guys tomorrow. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today, and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.